Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the European Central Bank policy meeting to be held on January the 25th. More importantly for you, the trading opportunities that may come about. My name's Sasha and I'm a financial analyst from the research department at ForTrade. I'm really pleased at the interest shown in our webinars and thanks for your positive comments. If you have any questions, I will try to do my best to answer them, or please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read the usual risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, we would like to present our new offer that is exclusive to those watching this webinar. To use this special offer, a code will appear on your screen during the webinar, which I will repeat at the end, that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours and that this new offer applies to all of you, not just second-time depositors. If you make a deposit within the next 24 hours, you will receive a balance bonus. If you deposit €1,000, you will receive a 2% balance bonus. Deposit 2,500, receive 4% balance bonus. Deposit €5,000 and receive a 5% balance bonus. Deposit €5,000 to €15,000 and your overnight interest rate will be covered for 1 month. Deposit $15,000 to $25,000 and your overnight interest rate will be covered for 2 months. Deposit $25,000 or more and your interest rate will be covered for 3 months. You are free to use this offer however you choose. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want. Market opportunities are provided by the research department on a daily basis according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. Here is an example of a very recent market opportunity. You can see fundamental analysis on what's going on with the euro-dollar currency pair. Below, you can see some geopolitical events that can influence the euro-dollar currency pair. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see here on the screen, this shows the right moment in our estimation for you to come in and open a trading position. If you want to trade during the day, then you can see here the estimated trend direction, which is up for intraday, weekly, and monthly periods. It's also important that you know how to use a stop loss and take profit options. You have resistance and support levels. At these points, you can see on the screen, you can put a stop loss and take profit. And further down, you have calculations. If you close the position using take profit, you can expect those kinds of profits. If the price is going against you, then you could potentially have a loss of this amount at these resistance levels. The pivot point is the recommended price for opening a trading position. The support and resistance levels are for daily, weekly, or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So, what is the ECB? The European Central Bank is the central bank for the Eurozone, and it sets and implements monetary policy for the European area. The Euro area, that should be. The main objective of the ECB is to maintain price stability within the Eurozone. Like many of the major central banks, it aims to keep inflation at 2%. Mario Draghi is a governor of the European Central Bank, but the Council consists of 6 members of the Executive Board and the governors of the national central banks of the 19 euro area countries. Monetary policy is a strategy used by a nation's central bank on the amount of money in circulation in the economy and what that money is worth. If an economy is growing too quickly and inflation is high, the central bank might try to slow down the economy by raising interest rates. Generally speaking, the rule is usually that when central bank decides to increase interest rates, it's likely that the value of that currency will increase. But it's more complicated than that, since market expectations are a great factor, as the bank decision itself. For example, if traders expect that ECB will increase interest rates by a percentage point, it's likely the value of the euro will grow before the announcement. However, if the ECB announces an interest rate increase of only half a percentage point, the value of the euro might drop sharply, at least for a short period after the announcement. Speculation and expectations have a powerful effect on the markets. You can see on the chart before you how interest rates has varied over the past decade until reaching the record lows we have today. Until recently, interest rates were only one of the tools of monetary policy used by the ECB to encourage an expansionary or restrictive economic plan. The historic lows you can see on the table were designed to encourage the sluggish EU economies since the financial crisis. Today, the economic situation in the Eurozone is much improved. The previous ECB monetary policy meeting was held on December the 14th, and as expected, the ECB didn't make any changes to its record low interest rate of 0%. However, the bank hiked Eurozone growth forecasts, and Mario Draghi conceded that inflation still won't hit its target rate of 2% before 2020. In the run-up to trading, as indicated by the green bars on the graph, the euro strengthened, with many traders hoping to hear something which would imply a potential increase in interest rates. But a low inflation rate and increased European growth forecasts are dovish, not hawkish. So on the day of the meeting, the euro-dollar declined 0.89%. Markets were left unimpressed, with little to support the euro. More interesting for market impact was the release of the ECB minutes on January the 11th, which contained hawkish comments suggesting that policymakers are after all getting ready to prepare the market for the end of the stimulus scheme. Markets interpreted this as a signal that the ECB will wind down its Eurobond purchases. This might mean a surprise interest rate hike in December 2018, when the previously stated position was to hold interest rates until at least 2019. Once the minutes were published, the euro-dollar reacted by surging 3% before dropping slightly afterward. As you can see here, this pushed the euro-dollar up by 3% before it fell back. This is a good example of how minutes of meetings can reveal differences of opinion among committee members or give us clues to the future direction of monetary policy measures, such as whether interest rates will rise or decrease and how markets can be directly affected. Alongside speeches from ECB bank officials such as Draghi, it's clear that markets can be moved in either direction from the release of minutes of the meeting. ECB policymakers are reportedly concerned about the recent growth in the value of the euro against the dollar, since most economic data from the Eurozone has been very positive recently. This gives ammunition to the argument that interest rates could be raised earlier than predicted, further increasing the value of the euro to a 3-year high against the dollar. For this reason, officials are keen to not encourage the markets by issuing hawkish statements at the moment or give details about winding down bond purchases. Confidence in the Eurozone remains quite high at the moment, and interest rates are widely expected to remain at the current level of 0%. As always, nothing is certain, but most traders expect a cautious or slightly dovish statement by Draghi following the meeting to encourage the value of the euro to at least remain stable or possibly fall. However, it doesn't seem likely that the ECB will rule out a rate rise in December or this year. According to unofficial reports, it's likely that the ECB will drop its pledge to keep buying bonds. It's unlikely that the ECB will support its pledge to keep buying bonds. What you need to know here is a slower and smaller scaling back of bond buying will likely have a bearish effect on the value of the euro. A shorter timetable or larger scaling back of bond buying will probably have a bullish effect on the euro, make it stronger relative to other currencies. In case you missed the promo code during the presentation, this is your last opportunity to take advantage of our special offer, which will last for 24 hours. The promo code is ECBFX. Again, we feel that it's a great option to use our special offer either on the ECB event or to trade or on a market opportunity, but the choice is yours. Of course, we at ForTrade will be following any developments that affect the markets very closely. So please do get in touch with the Senior Account Manager if you have any questions or want to take advantage of the trading opportunities this event will present. Until then, goodbye and please join us again at ForTrade soon.